Welcome to the GCV Weekly Briefing Podcast, where we break down the key financial and economic developments shaping the landscape for investors, businesses and policymakers. I'm Matthew, and this week we're taking a look at the slowdown in the UK service sector, a looming fiscal downgrade for the Chancellor, investors turning to gold amid global instability, and a $20 billion energy transition investment from Brookfield. Now there's a lot to unpack here, so let's get started. September saw a marked slowdown in the UK service sector, which grew at its weakest pace in 5 months. The S&P Global UK Services PMI fell to 50.8, down from August's 16-month high of 54.2. Now that is still technically growth, but really only just. The reading came in below expectations and highlighted growing hesitation among both consumers and businesses to commit to spending ahead of the budget. Restaurants, pubs and hotels saw a sharp drop in activity, while firms across the board said corporate clients were deferring projects and households were cutting back on discretionary spending. After a summer of optimism, new orders grew only marginally, and Xbox sales, which had been their fastest growth in a decade, swung into decline. It's a reminder of how fragile the recovery still is. Political uncertainty and a cautious business outlook are back at the forefront, and analysts now warn that the rebound earlier this year may have only been temporary. Still, there is pockets of resilience. Some firms said their recent investments and expansion plans help sustain output even through these tougher conditions. Tim Moore from S&P Global Market Intelligence summed it up neatly. This summer's acceleration in output growth is now looking more like a flash in the pan, as an elevated political and economic uncertainty has reasserted itself as a constraint on the service sector performance. That slowdown has serious implications for the Treasury, and it may explain the Bank of England's more cautious tone lately. Moving on, the Office for Budget Responsibility is expected to deliver a $20 billion downgrade to the Chancellor's fiscal outlook, mainly due to weaker productivity assumptions cutting into the projected revenues. For Rachel Reeves, the timing really could not be worse. Her autumn budget is already under pressure from rising borrowing costs, growing defence demands and a global trade war. Economists estimate that even a 0.1% drop in productivity forecasts could cost the government around $9 billion. Now that leaves limited choices, either borrowing more, or cutting back spending, or raises taxes. The OBR's forecasts have often rightly so been criticised for being too optimistic. This adjustment brings them more in line with the IMF and the Bank of England's more modest expectations. Productivity growth is now forecast to rise by just under 1% a year, down from 1.25%. That may sound small, but it could shrink Rachel Reeves' fiscal headroom by around another $20 billion. Andrew Wishart from Bremberg put it bluntly: Parliament can't really pass much more in the way of spending cuts. If anything, an overshoot has to be met with tax hikes. Fiscal uncertainty that mirrors a global mood that's pushing investors towards safer assets. Gold prices have climbed above $4,000. That's roughly £2,980 per ounce for the first time, making one of the strongest rallies since the 1970s. The spot price has hit $4,031 in London trading, up more than 50% this year, following gains of 27% in 2024 and 13% in 2023. So, political instability in the US, France and Japan, as well as renewed trade tariffs from Donald Trump and ongoing conflicts in the Middle East and Ukraine have all added to gold's appeal. Gold ETFs have seen inflows of around $64 billion this year, including a record $17.3 billion in September alone, according to the World Gold Council. Central banks, particularly China, have also been buying heavily, reinforcing gold's role as a reserve asset in uncertain times. Futures prices have climbed even higher than that spot rate, a sign that demand isn't going to slow anytime soon. Ray Diallo, founder of Bridgewater Associates, drew a historical parallel. He said it's very much like the early 70s. Where do you put your money in? Gold is a very excellent diversifier in the portfolio. If you look at it just from a strategic asset allocation perspective, you would probably have something like 15% of your portfolio in gold. While many investors are reacting to safety, others are taking the opposite approach, betting on the future. Brookfield Asset Manager has raised 20 billion for one of the largest private funds in the world, dedicated to the energy transition. It's a strong signal that long-term capital still sees the opportunity in clean infrastructure. The Brookfield Global Transition Fund follows a 15 billion predecessor and has already deployed more than 5 billion, including 6.6 billion acquisition of French renewable developer Neon. Major backers included UAE's Altera with 2 billion and Norway's Sovereign Fund contributing 1.5 billion. Brookfield itself will also provide roughly a quarter of the total capital. The fund has also acquired the former onshore renewables business of the National Grid in the US, now operating as Geronimo Power, and has also committed to funding Evern, a joint venture in India focused on wind, solar, and battery storage. Long-term investments will include nuclear and carbon capture projects, building on Brookfield's existing partnerships through Westinghouse and Comenso. Connor Teskey, Brookfield's president, explained the thinking behind it. Energy demand is growing fast, driven by growth in artificial intelligence as well as electrification in industry and transportation. Against this backdrop, we need any and all approach to energy investment that will continue to favour low-carbon resources. So, as this week wraps up, these stories together show an economy and market well in transition. Investors are very clearly split. Many are seeking gold, but large funds are still looking to be ahead of the curve. Back at home, the UK service sector slowdown and the OBR downgrade highlight the need for quality decisions to be made in the coming budget. That's it for this week's update. Thank you very much for listening.